Jared Dillian. Now you know a rich guy.
I'm Jared Dillian. This is the Jared Dillian Show. We're talking about investing is not easy. It's hard. Investing is hard. If you want to talk about that, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. You can also go to my website, which is jareddillionmoney.com. If you go there, you can get a hold of old shows, or you can follow me on Twitter at DailyDirtNap. And we're talking about this idea that past performance is no indication of future results. But when it comes to stock market returns broadly, people just lose their minds and they think that past performance is an indication of future results. Since the stock market has returned 8% historically, it should return 8% going forward. But we don't know. And if you hear people saying that, and by the way, you know, there are a lot of people who will say that, including a few competitors of mine, they are committing malpractice. They don't know it. I mean, they're doing it innocently enough. They're not trying to, deceive anybody. But what they don't know is that we don't know. We don't know what's going to happen. We don't know what's going to happen next month, next year. There's an election next year. A lot can change with that. We just don't know. So here's the thing. Now you and I are investors. We're personal investors, and we have to save for retirement. And we have this, historical data that says that the stock market returns 8% a year. We have this historical data that the bond market returns 5% a year, and gold returns this, and commodities return this, and all this. But it makes sense to put most of your money in stocks because they return the most. But what if that's wrong? What if that's wrong? What if our assumptions are incorrect? What if another asset class would actually return more? How do we make plans based on the fact that we don't know what stocks are going to return? So it's a super, super hard question. And I don't expect you to be able to answer that question. Like, how would you know the answer to that question? How would you know how to structure your portfolio so that you can optimize your return until retirement under the assumption that we don't know what anything is going to return? But that is literally the position that we're in. If we're going to be honest with ourselves, if we're going to be intellectually honest, we don't know what anything is going to return over any length of time. All we have is historical data. So if you want to go based on historical data, that's fine. I prefer to go based on my own brain and figuring it out, right? But it's easy for me to say that because I'm a professional investor, and it's harder for you. And plus, I get stuff wrong too. But here's the thing. If you don't know what stocks are going to return, rather than being 100% in stocks or 80% in stocks, you probably shouldn't own so many stocks if you don't know what the stock market is going to do. I mean, there is a chance that stocks are bad and something else is good. Maybe something else will be good for the next 50 years. Or, since we don't know what's going to be good, maybe we should just own a little bit of everything and be diversified. So some things will be good and some things will be bad, but overall we'll earn some average return. I think he's still at Yale. There's a guy at Yale. He runs the endowment. His name is David Swensen, and he has done very, very well. And Swensen gets a lot of positive press because he doesn't pay himself very much. But aside from that, I'm not talking about that. Like Swensen, basically what he did was he took the investment universe of stocks and bonds, and he said there's all other kinds of assets out there. There's real estate, there's gold, there's commodities, there's collectibles. And basically what he said was, if we don't know what things are going to return, we should invest in everything. And he literally bought everything. And for a while, I don't know the recent data, but his portfolio did better than all other endowments, So yeah, there's stuff other than stocks. So about a week or two ago, we talked a little bit about real estate. Real estate as an asset class. And real estate is a very popular asset class in the U.S. Lots of people invest in real estate in their spare time. And what you usually find is the people who invest in real estate really like real estate and they don't invest in stocks. And the people who invest in stocks really like stocks and they don't invest in real estate. You don't have a lot of people that do both, which is kind of interesting. But the people who do real estate, if they do real estate well, you can make a lot of money in that. So, like I said, there's all different kinds of stuff. You can invest in bonds. And when I say bonds, there's all different kinds of bonds. There's corporate bonds, emerging market bonds, treasury bonds, municipal bonds, all kinds of bonds. There's commodities. There's every different commodity under the sun. There's agricultural commodities. There's metals. There's energy. You name it. There's gold. There's real estate. There's collectibles. There's all kinds of places to put your money other than stocks. So we don't know. Like I said, we don't know what stocks are going to return. We just don't know. Here is the thing. There's no silver bullet. There's no magic beans. Look, I'm the expert, right? Would I like to be able to give you this magic potion that says invest in this and you'll be able to retire safely? I would like to be able to do that, but I can't. It would be dishonest. It would be dishonest. And I'm not going to sell you the easy solution. And the easy solution is just put it all in stocks and it's going to go up 8% a year and you're going to be able to retire, because that might not happen. So this, we're just stuck and there's no right answer, but the right answer is to not be concentrated in a particular type of asset. You can't be 100% concentrated in stocks, and you can't be 100% concentrated in bonds, and you can't be 100% concentrated in real estate. I know lots of people that are 100% concentrated in real estate. If you have all of your financial wealth in one asset class, then you are asking for trouble. And I'm not just picking on stocks. I mean any asset class. If you have all your money in one asset class, then you're in trouble. Let's take a call. Jess from Vermont. Hey, Jess, what's up?
Hey. Hi, Jared. So the question I have is, I have a stepson who is in his late 20s. He's not an investor per se, but he does have some knowledge. He does follow the markets. He is interested. He's at the point in his career where he's starting to be able to put money into, savings of some kind, not just savings, but investments. And how do I help him understand the best way to get started? And do you recommend going to an advisor, or, do we get him a Scottrade account and kind of start showing him the ropes? How do you introduce somebody to this in a way that helps them understand the way the markets move, but also encourages them to participate?
Well, it kind of depends on what your objectives are, or what his objectives are. Does he plan to start invest with a mind of saving for retirement now, or does he just kind of want to screw around and trade some stocks?
Well, so I've told him kind of my philosophy, which is 90% you put into something that is reliable and 10% you play with. And
Okay.
He's at the point where he has kind of $20,000 a year that he can both invest and play with. And so I'm telling him, put $18,000 into something that you feel is an investment and use $2,000 of it to play with. And this is in addition to his savings. He's already saving. This is him kind of getting involved in investing. But I'm not sure if the best thing to do is to send them to...
the $2,000 to play around with. I mean, sure, I would say, open a Robinhood account and trade some stocks and skin your knees and get roughed up and, kind of learn what trading is like. And for the $18,000, I would say, go to one of the big no-load mutual fund companies. It doesn't have to be Vanguard. It could be T. Rowe Price or Janus or Fidelity or something like that. And that's where you do a little bit of asset allocation. You pick a stock fund, you pick a bond fund, and you just let it sit there.
Okay.
But I mean, I think your approach is absolutely correct. Of having 90% of it be long-term investments and 10% of it, this is going to be an education. This is going to be kind of playing around. I think that's 100% correct.
Right. This is learning.
I think that's perfect.
Yeah. Okay. Great. Thanks very much, Jared.
Yep. See ya. What's funny is we haven't talked about yet. We haven't talked about Bitcoin. In fact, not one show have we talked about Bitcoin. And Bitcoin I actually was a big Bitcoin hater back when it was like a bubble in early 2018. But I actually think it's gaining some legitimacy. So, to go along the list of possible asset classes, bonds, commodities, gold, real estate, collectibles, also cryptocurrencies are an asset class. You might want to get exposure to that. I can actually think of a couple of scenarios where that might be the best performing asset. So, it's good to get exposure to everything. So one solution is you own every asset, so you don't know what anything's going to return, so you just own them all. And another solution is you make a bet. and you say, I'm going to use my brain, and I'm going to say, I'm going to try to predict the future, and I think gold is going to do the best, and I'm going to put all my money in gold. That's fine. I guess what I'm saying is that just don't passively follow the herd and do what everybody else is doing and accept the conventional wisdom that the stock market always goes up over time. By the way, just in investing, like following the herd and the conventional wisdom usually works out bad. It works out bad. That's never an approach that I've used. I tend to be of the philosophy that has worked in the past will not work going forward. Again, everybody says this is why it's so weird. They're like, investing is the easiest thing in the world. Just buy the S&P 500 mutual fund, dollar cost average, buy the dips. Stock market always comes back. You're going to be able to retire. You know what that is? That's not using your brain. That's not thinking. That's faith. That is faith. We don't do faith here. By the way, no religion here. None. No religion on this show. Religion doesn't have anything to do with investing. And that is faith, and I don't like faith. I like your intellect, using your brain. So why is investing the easiest thing in the world and like plumbing is hard? I don't get it. You should probably think about it. I'm Jared Dillian. This is the Jared Dillian Show.
Jared Dillian. Now you know a rich guy.